Is Bitcoin on the cusp of forming a double bottom just like in 2015? It would need to drop into 16K, which happens to be the range low of this general macro range. And so far, so good. We're seeing downside getting closer and closer to the range low support. But I'm going to be talking about why I don't think this is going to be the case and why I actually think a higher low might be a better option here. And we'll be talking about the 4-year cycle and why the 4-year cycle supports that. Subscribe to the channel for more videos like this in the future. Like the video if you enjoy videos like these, and let's talk about the cycles, because right over here we have a double bottom formation, here we have a U-shaped formation, and we have a deviation, a sort of V-shaped reversal in this current cycle. And the thing about this double bottom formation is this was the bear market bottom accumulation range, and so was this U-shaped reversal. This was also a bear market bottom accumulation range, and so was this V-like shaped formation, which was a deviation. This was also your accumulation range in the bear market bottom. So talking about this bear market bottom accumulation range being a double bottom and saying it's going to be the same thing as this, it's a little bit of a different market cycle context. These are very different stages in the market cycle, and we'll be talking about that why in a bit more detail, because even if we do get a macro double bottom, it would need to see Bitcoin drop into 16K right over here. So that's the very bottom of this macro range, and we are seeing Bitcoin play out slowly but surely, rejecting from this range high resistance, this being the double top. The double top needs to lose 26K as a support to validate and drop lower inside the range. But the thing about this being the double bottom, you can see how this accumulation range in the bear market coincided with this macro downtrend, and you can see that breaking out from this range was actually facilitating a retest of this macro downtrend, enabling further upside. So a breakout from the range enabled a new macro uptrend, and here as well, breakout from the range enabled a macro uptrend. And right over here as well, you can see that a breakout from the accumulation range got us closer to the macro downtrend. We broke beyond it, and now we're enjoying a macro uptrend once again. However, we have to talk about whether we're going to get a 2015 retest. I've spoken about this in a previous video, so feel free to check that one out. But of course, will a double bottom take place for Bitcoin in this cycle? It's very different to this cycle. This is the accumulation range around the macro downtrend. We've already entered a new macro uptrend here, and we've already broken out from a bear market bottom accumulation range and also broken into a new macro uptrend. So if we do retrace, and we could retrace upon losing 26K as a support, this double top would validate and see further downside within the range, and this is a higher low to really watch out for should that occur. And the thing about the higher low is that if we look at the 4-year cycle, and we've seen 4-year cycles before, this is the bull market top year, this is the bear market bottom year and bear market year, the bottoming out year in candle 3, the reversal year in candle 4, and we see this repeat even here as well. And the thing about bear market bottoming out years, which is candle 3 in this cycle, we tend to see certain relationships with these candle 3s, and one of those relationships is that we tend to see the bear market bottom, or at least the bottoming out candle, end at a lower price to where the candle 4 occurs and actually opens. So you can see this is a higher low right over here as well, where candle 3 bottoms, and where candle 4 bottoms, this is a high low as well. So what I'm essentially just suggesting is that candle 3 is going to form a higher low with candle 4, the one that forms in the future, and we'll see something like this, potentially some downside wicking, but never really equaling these lows. And if you're enjoying this video, feel free to subscribe to the channel for more videos like this in the future, and of course leave a like, as it really helps with the algorithm and helps this channel grow. So we'll get a higher low, which only just adds further credence to a potential higher low forming within this range. Of course, if Bitcoin does crash all the way to this higher low, and maybe we even see some downside wicking, then that's all well and good. It's still a higher low, even if we see some downside volatility below this higher low. And it's also really important to mention when we talk about the cycles in particular, because every cycle has a key resistance area, a key generational resistance. When we see in 2015 the double bottom breakout into new highs, we essentially tap this old resistance and it acts as a resistance before turning into a support later on and then seeing wonderful accumulation, or at least acceleration towards the upside. And in this cycle, we also have a generational resistance. This black one, this was a support which gave way, acted as a resistance very briefly, but a breakout, and then acted as a support before further upside and new all-time highs. And in this cycle, we're also looking for this generational resistance. We're not quite sure where it is yet. I feel like it might have been at 34k, but if it's a little bit lower in 31k, then that's all well and good as well. The main thing is that this resistance will be acting as one in the short term, but over time we should be able to break beyond it and then turn it into support before further upside to new all-time highs. And the thing about that is that this is really influenced by the halving events. We can see we break beyond those resistance areas closer to the halving, we turn those resistance areas into support closer to the halving, which are these blue vertical lines, and we'll probably see this turn into support closer to the halving this cycle as well. But the main thing to mention here is that this double bottom in 2015, it's not going to be the same sort of double bottom in 2023, 2024. It's not going to be your sort of accumulation at the bear market bottom. Instead, it's going to be more of a 2019 accumulation phase where we see this little accumulation phase being essentially this, break out to new yearly highs, top out, and then pull back into that region but form a higher low nonetheless. This is macro accumulation, and so is this. This is also macro accumulation. So we can't equal this period to this period. I mean, we can equal these two periods, but we can't equal these periods together with this period because it's not the same thing. Because this is equaling this and equaling this. And this accumulation range is only part of the macro accumulation that we tend to see going into the halving event. So it's interesting to mention, this is only a fraction of this overall macro accumulation that we see prior to the halving. So a double bottom, could it occur? It could technically occur, but it's not essentially the same thing as it is here. I feel like we're going to see more of a higher low develop as per the macro range low, higher low right over here, with some scope for downside volatility. Revisiting this for a double bottom would be a little bit less likely based on what we've seen in the previous cycles. When we talk about the 4-year cycle, particularly the 4-year cycle, we always see higher lows, candle 3 to candle 4, candle 3 to candle 4, and we'll probably see that in this cycle as well. So will we see a 2015 like double bottom in this cycle as well? The 4-year cycle suggests that we'll probably see more of a higher low like we're seeing in this macro range going forward into late 2023 and early 2024. But what about altcoins? What's going to happen to altcoins going forward? And you can check out and learn more about that in my video right over here, and I'll speak to you in the next one. Speak to you soon.